last session of the day, I think since morning, there has been quite a keen interest right from the first session when it was touched upon in the GIFT City till possibly the second last session. There has been tidbits about GIFT City. And we know all that GIFT City is supposed to be the pioneer, and we have been talking about the trade initiatives in India, especially from an export, since we are talking about GIFT City, which is enabler for the cross-border financing specifically. From India's $800 billion to $2 trillion, that's the journey. And we all know that, that journey is a threefold or possibly 2.5-fold, which is expected to be done in 5 years. So from that perspective, we need to understand from the stakeholders here and the panelists who are there, of course, and we have been talking about since morning, we didn't have a regulator, and now we have the regulators also on panel, and they will throw some light on what all which we can provide in the new initiatives and the GIFT City IFSCA in particular. How we have done the session is that we have split the session in two. Of course, 30 minutes for the panel discussions, which we have set questions, and I'm sure that there will be many questions from your end specifically. Most of the banks here are already set up in GIFT City, so I'm sure, but I understand that possibly the members from the GIFT City are not attending. These are all onshore members, and they will have many questions, so please be open about your questions coming in. Very quick introductions. I'll leave it to each of the panelists possibly to introduce themselves and set the context of this session. Shekhar, start with you.
Good evening, everyone. I am Shekhar Tejwani. I am a part of the IFSC department of GIFT City. Just to be very clear, we are the master developers for the city. So we are the city itself. We are not the regulatory body. Regulatory body is right next to us. So just to set the context, even GIFT City has a story of its own to tell. So how GIFT City, why GIFT City was initiated? Where did the idea come from? So the concept, I'll cover it in a brief. The concept goes way back to 2002, 2003, when our Honorable Prime Minister, who was then the Chief Minister of the state, was traveling to Singapore for promoting Vibrant Gujarat Summit. There he interacted with an Indian diaspora, asking them what sort of activities are you doing from Singapore. So to his amusement, he got a response that we are serving the Indian clientele sitting in Singapore. So he was very curious that why can't you do all these activities from India itself? Then came the answer, sir, we have foreign exchange control regulations under FEMA, which prohibits us to serve the foreign currency requirements of Indian clientele by sitting in India. That's why we are doing it from offshore center. Then he came back to India and the idea was proposed that why not India have its own financial center. So that's how 2007 was the year when foundation stone was laid for GIFT City. And in 2011 is the actual year when the work on ground started. So before the regulations come in, the infrastructure was the first thing to attract the players to set up in GIFT City. So the kind of infrastructure that GIFT City is building is unique in its own sense because the city which you see over the ground, there's an equivalent city below the ground itself. So all the utilities which are essential for a city are based out of an underground utility tunnel, which is for the very first time in India that any city has covered. It's a greenfield smart project. It's built from scratch on a barren wasteland. And then comes the regulatory part. So 2011 to 2015, all the groundwork was being done. The CapEx was being made for constructing the infrastructure. 2015 is the year when the first set of regulations came in for an international financial services center to function in India. But again, these were coming in bits and pieces. So RBI, SEBI, IRDAI, they all came up with a regulatory framework, which was almost one page, half a page. So that was the kind of situation way back then. But then again, India realized that if you want to develop this center as a global center which can compete with other financial centers, so you need to have a focused approach with a unified regulator. So that's how in 2019, IFSC Authority Bill was passed in Parliament. It came in as an act, and 2020 is the year when IFSC Authority started took the charge and started operating out of Gift City as a regulatory body. So IFSC authority since then is a unified regulator for all the business activities. Started with banking, capital markets, insurance, the core financial pillars of a financial jurisdiction. But again, we realized as India, we have our own hinterland demand. We are not dependent on the demand of other jurisdiction. Our own population is so huge, our own demand is so huge to cater to that we can pioneer it in other business verticals as well. So that's how post banking, capital market, insurance, we started with aircraft leasing, alternative investment fund, ship leasing, then came in foreign university as a regulatory framework. Then we introduced bookkeeping, accounting, taxation, financial crime compliance. We introduced fintech as a regulation. We came up with a global treasury framework and whatnot. So as on date, we have 29 regulations covering different business verticals. And the journey so far has been on a growth trajectory, and since last 4 years, we have witnessed a hockey stick curve. And I'd love to contribute to the panel further.
Shekhar, thank you so much. Don't get intimidated by the barren land. Of course, if you go there and see that thing, that barren land has been used in the most optimal manner. You'll see a number of skyscrapers already there, and within the SEZ, of course, but within the IFCA also new buildings are coming up, and there is a school, there is an entire infrastructure which has been put in place, and this is just the start what we are talking about, right, Shekhar? Riddhi, over to you. You have been the pioneer and and member involved in the Gift City or IFCA, more particularly on deputation from RBI now, totally with IFCA. There have been number of initiatives at IFCA which you have led through. Maybe you can throw some light about, and of course these are not just restricted to the ITFS platforms, the aircraft leasing, ship leasing, and possibly the capital markets point of view and whatnot. Can you please share some insights about the brief overview about the what all is being done in the Gift City or IFCA in particular today, and what are the policies in place to possibly take in future for high growth? This is all towards possibly, Shekhar mentioned that how can we bring about the international sort of a business. So towards that, possibly few words.
Sure. Thank you so much. And thank Shekhar also for the introduction on the Gift City and how infrastructure development is being taken care of by them at a very good pace. Thank you for that. In terms of the regulations, we've seen, like as Shekhar had pointed out, in 2020 when IFSC as an authority was set up, we had seen that there were around 120 entities which were there, which were operating in GIFT. Now we have 800 plus entities which are operating out of GIFT. We see that the number of employees that are operating out of GIFT has crossed 5,000 employee mark. If we look at the ecosystem or the regulations that we've been developing, we've seen a great boom in terms of the banking industry. So if you see the banking ecosystem, we have 16 Indian banks which are present in there. We have 13 foreign banks and another 4 to 5 foreign banks in the pipeline. So when we look at if we plot the banking, IBUs that we call as the IFSCA banking units on the world map, I think we have now representation from each and every corner of the world representing in IFSC itself, catering to the needs of the Indian corporates. When we go ahead and speak about the other industries, maybe the non-banking industry that we speak about, which Shekhar slightly touched upon, is that non-banking, as we know in terms of the RBI census, the lending institutions or the investment institutions. But with the powers that IFSCA has as a unified regulator, we have redefined what kind of financial products, financial services, and financial institutions can exist in IFSC. So we've extended the scope of it to include operating lease of aircrafts, operating lease of ships, hybrid of operating lease for each of the equipments. Even the list of equipments is being enlarged on a regular basis. Recently, like 1 month back, we had a public consultation paper on whether oil field equipments should be enabled to be leased out from IFSC. Going ahead in terms of other innovative solutions, we have ITFS entity, which is International Trade Financing Platforms, which is one of its unique kind. It's one of the only regulated entity, I would say, in the world, which facilitates cross-border financing under the regulatory net wherein we ensure that what kind of financials are getting onboarded. You are sure about the FATF compliance of the entities which are funding in there. It enables onboarding of payment service providers onto the platform so that the corporates can get better rates in terms of the volumes that they generate. We have included insurance also onto the same platform so that an institution which is getting the benefit of insurance can also take insurance quotes from within the system. Going ahead, we have innovative solutions like treasury centers. So, this Singapore story again, yes, a lot of treasuries, corporate treasuries do operate from Singapore, DIFC, and other financial centers. And the need was like, why not in IFSC? We had initially brought down the framework in August 21, then recently revised in April 2025, the revised framework, which has enlarged the scope of activities that a treasury center can undertake. When we speak about the moving ahead towards the non-banking aspect of it, so we do have factoring entities which are registered with IFSCA. We came out with the factoring registration regulations. We have entities which are registered under the Factoring Regulation Act, which operate here to do cross-border factoring services. We have lending institutions which lend to students for education towards foreign universities, getting them better rates, better facilities. We have payment service providers in it. We have payment system operators. That's all of the banking ecosystem and its enlarged or the elongated scope of banking, I would say. Moving ahead, we have fund ecosystem. So we have 250 plus funds which are already authorized in IFSC to operate with different agendas, maybe focused towards green, focused towards manufacturing sector, focused towards investments per se, and you can see a broad area of funds which are there operating in the GIFT. In terms of the exchanges, both the exchanges have their counterparts in GIFT IFSC. We have connects with international exchanges like the SGX, the Luxembourg exchanges in the pipeline, having connect with that. There are regulations which have enabled direct listing of entities. So an entity can come and directly list in the IFSC exchanges and get the benefits of direct listing, raising overseas financing. This is all about a lot of financial institutions. I can continue. It's only been a 4-year journey, but I can tell you that there has been tremendous amount of work. I know people will be very inquisitive about many more things, which I would take maybe in the Q&A session. And giving justice to the other panelists, I'll hand over back to Raviji.
Thank you so much. We talked about dealing with different regulators in the morning. Specifically, somebody said that insurance you have to deal with IRDA, for banking you have to go to RBI, for capital markets, SEBI, and various other things, and unified regulator. So one-stop solution for all the things, and all this in 4 years. Tremendous achievement, I think. Tarandeep, possibly as a global bank, Standard Chartered, operating in most of the global financial markets, which you are operating already today in Singapore and even in Dubai. Your expectations, you're one of the first banks to set up there. Possibly share with us what were your expectations, objectives, and advantages of operating in GIFT City or IFSC, which you have already done so. And please kindly share with us the experience till today on the existing business opportunities which we are doing today.
Thanks, Ravi. So I'm Taran. I head trade for StanChart for India and South Asia. Very glad to be on this panel. So we, as you rightly said, Ravi, we had, being a global bank, we had an experience across, Western markets like London and New York. We also had, experience in markets like Singapore and Hong Kong. And obviously, when the entire GIFT piece was coming in, DIFC was one of the, benchmarked IFCs that, we looked at as well to see what kind of proposition we could offer that DIFC is doing. And DIFC was actually, not new, but kind of going through that growth 5 years ago. So when in 2020, the entire regulation came into play, we were the first foreign bank to, get the license and also roll out the FPI piece for within GIFT, and also a full suite of trade proposition, trade product way back in June 25. So broadly, we have completed 5 years within the gift journey. And I was in gift a couple of weeks back, reflecting on these 5 years and what we have achieved and what we thought we would start from and where we would end up in. So over these last 5 years, I think what has really helped GIFT is a very stable, open, and supportive regulatory framework. Very strong. You're seeing a lot of human capital coming in, very good infrastructure coming in, which are very essential components of growing or developing a IFC. Uh, Today, in the last 5 years, what we do is all kinds of products across trade, structured lending, uh, derivatives, FX hedging. We also do quite a bit of more recently, a lot of liquidity management solutions, which again enabled by the regulator. And within trade, we have been able to launch a whole set of supply chain finance solutions across receivables, payables, including traditional products, banking products. In a sense, today in GIFT, we offer more products than we offer in India. So what used to be a strategic discussion for us with our clients, for GIFT in terms of providing or looking at this as a financing or liquidity center, has now become BAU. So today every client conversation, GIFT City is a BAU conversation, and I think that continues to pick up. Also, when we started, we looked at, like any incubated entity, we looked at GIFT primarily from a India perspective. How can we support our Indian corporates cross-border trade? Things that were not possible in India. We were very overwhelmed initially to say this is possible, this also we can do, etc., etc. We have now come to a point where we are seeing how this is relevant not just for India, but for all my South Asia clients and also beyond South Asia. So we are seeing a lot of use cases coming up for, subsidiaries of Indian corporates or subsidiaries of other corporates, which my New York entity might not be very comfortable onboarding purely from a commercial or time perspective, operational perspective. Those kind of use cases we are seeing how can we bring those kind of flows into GIFT and really support our clients. So in effect, I think, and as I reflected a couple of weeks back when I met besides the regulator the entire stakeholders, I think we have far achieved more than what we thought we would achieve in 5 years, and I think it's only going to go up from here, as Riddhi rightly said, with more and more players locally incorporating in GIFT. I think the next wave of opportunities, how do we meet, banking needs of these clients, whether these are exchanges, broker, dealers, insurance companies, all of them would have some kind of need, including liquidity solutions, including, structuring solutions, and that's what we are, now addressing.
Wonderful, Tarandeep, wonderful. I think more product suite than the domestic in India, and this is after your being there in India for a number of years. I think more than 100 years, right? I guess Stancy
67, yeah.
160. Okay, so that's the thing which is there. So we heard, and this apart, possibly what you can't book in the global markets is something. The most important part is when we know that global markets, many of us have been part of the global markets. The challenge is more specifically when you deal on the KYC front, and that's possibly the biggest support mechanism which you can provide to your international stakeholders. Coming back to Rohit, to you, as Japan's largest bank and operating out of India since 1953, almost 7 decades now. Okay. What has been your journey and your focus areas in India, in particular, of course, onshore? And what are your goals for India in future? And what are your expectations, similarly, like what Ramdeep shared, out of IFCA? And what has been your experience? I think you set up there in 2022. So what has been your experience? Please share the insights.
Sure. Thank you. I'm Rohit Narayanan, and I head transaction banking for MUFG Bank. We are here for last 7 plus decades, and The journey has been enticing, interesting, and very exciting. So, being one of the largest Japanese banks, there were a lot of impediments that we had with respect to the speed and the nature of clients that we handle in India, right? So, adapting to that was the biggest challenge. That was more internal challenge than an external challenge. It was more of a positive challenge, as I would put it. So, we worked towards that. We have been quite successful at it. We are one of the top foreign banks in India as such. We deal with the large corporate segment, local large corporate segment. We deal with the multinational segment. We deal with our home market customers, with our Japanese corporates, and a lot of financial institutions as such. Those are the client bases. Our focus area, as in from an India perspective, if you see our Asia Pacific strategy document, India is the top pillar of growth for us, as in from a vision perspective. For the next 3 years, it's clearly identified that India will be the pillar that will drive growth in the region. And gift is going to be the biggest part of that pillar, as far as growth initiatives are concerned. We have had a very exciting journey in gift, honestly, and primarily the efficiency and the adaptability and the approachability that the regulator has been a big enabler for us to support our clients in their requirements. Most of the clients have got different set of requirements, and we need to adapt that to the individual booking locations as such. The easiest booking location that we have been able to work with is easily gift. We work with Singapore, we work with London, we work with Hong Kong, we work with Dubai again. But easy adaptability, easy approach is something that has helped us. We started in August 2022. In 2.5 years, we are almost $11 billion book of the overall 80 plus billion of gift. So this is a significant proportion of our assets getting booked there. That's overall. And from a trade finance perspective, I would say I think we have had great success. We started off around 1.5 years back. We are almost at a $1.2 billion asset book as such, and that's across clients. The different products that we're able to employ, the different approaches that we're able to give. Insurance is something that Madam mentioned here, which actually has helped us to give solutions, give unique solutions to our clients, which actually helps us to sell our products, sell what the customer wants, not what we want to sell to them. So it's essentially has been a very, very interesting journey. We have had a couple of instances in the last 3 months, I would say, where we faced roadblocks, but we understood that there are problems. We went and sat with the regulator. We understood what kind of impediments are there. How do we work with the impediments? How do we convince the customer to follow what is required? And there were a lot of enablers provided by the regulator themselves for us to ensure that we were able to do that transaction, those transactions per se. So I think it's an interesting journey. Lot of scope for us to do more. There are a lot of things that need to be pressed upon. Liquidity solutions is something that Taran mentioned, where we need to have some kind of a global approach with respect to regional treasury centers, having pooling solutions, which are actually very strong requirements of multinational companies operating across various regions, right? So I think those are things that I'm sure that it's there in the regulatory landscape and it's getting worked upon. So it's going to be quite an interesting journey going forward, and we are really glad to be part of it.
Thanks, Rohit. Easier than the other IFC centers. Okay, that's the point for kudos to IFSC. I think maybe a round of applause possibly. Yeah, I think that's something. And this is all in 4 years, what we're talking about. So important. Coming back to Madam, it seems, what we are reading, and since morning we are talking about increasing from Make in India, defense, and various other sectors coming in. There's a great opportunity for manufacturing to increase in India and exports to increase out of India. And the recent, what we are talking about in the forums. How, in your opinion, can entities benefit out of India's own international center? How can they make it? We heard about the test case in the morning from the representative Anuparna ji from ArcelorMittal. Possibly you can throw some light on that as well.
Sure. Thanks for that. So before I actually go back to answering the question in some sense, because that will depend on the needs of the corporates. But one statement that I can make is that if you have a need which can be solved by any other center in the globe, then the center is GIFT IFSC. You need not go to any other center, international financial center, for any services, any financial services specifically, because everything is available at the doorstep of our own international financial center at GIFT City. Thank you. Going ahead to specific shift in the economies, yeah, that's like the political risk, which would shift, from one center to other. But how a corporate can effectively utilize GIFT City is from the perspective of not looking at just with an India-centric, but as Tarandeep just mentioned, it is more of a region-specific solution that you should look at. When you look at maybe setting up a holding company, you want to enlarge or expand your scope to other regional centers or other centers outside India, or within, when we have talks with MNCs who want to then diversify in India because they have getting good opportunities. They want to invest into manufacturing sector, into sustainable sectors, into solar power projects and to other projects. They can have GIFT City as the hub, wherein they can have a holding company, which can then further make downstream investments into India, which makes it easier for people to consolidate. We've seen examples of PSUs in India which have set up their treasury centers in IFSC because they want to consolidate their overseas investments to India to make it more strategically located, having more hold on it, rather than having it in Netherlands or in any other place, maybe in Singapore or Russia. So that is one place wherein you can consolidate whether you are intending to expand in India or an Indian which is intending to expand overseas. When we look at treasury centers, that is an extended thing. Like, generally when I speak with entities in Singapore or in Dubai, people tend to go there because they feel that they can get multiple roles, or entities can play multiple roles. So an entity can become a treasury center, it can become a holding company, it can become a trading company. What we've enabled presently is that yes, you can become a holding company, you can become a treasury center. Under treasury center, you can undertake re-invoicing, you can do cash pooling, you can do even advising to your entities. You can have people from outside which can be deputed here. General perception is when you go to in any of the center, you need to hire locals. That is the mandate of the entities there, of the regulators there. But that is not the case with here. When we look at onshoring what is offshore, we not only look at institution services and products, but we also look at the talent, the brain drain that has happened in the past, and how we can actually onshore the brain drain back to India. That is also the key objective of setting up the IFSC. I would also like to highlight one thing that, as Rohit just mentioned, and he highlighted that how easy it is to approach a regulator. I have been a regulator like now for more than a decade. I was working with RBI prior to joining here, and I have been a regulated entity also when I was working with ICICI. So I've seen the journey that how, the roles change, and I would bet onto it that there cannot be a more approachable regulator than IFSCA. We do believe in public consultation. We do believe in speaking to the stakeholders. We have informal guidance scheme also brought into place wherein people can formally approach us and take guidance onto specific issues or understanding on specific regulations. For any new regulation that we bring into place, we have introduced the FSLRC requirements of having public consultation, giving public 21 days to actually comment on it. And post that, we have specific stakeholder consultations targeted to specific regulations to get the best out of the industry and see the needs of the industry. Just to quote an example before I hand back the mic to Ravi, I would like to say that recently we had revised the framework on ITFS. We came out with the revised framework in December. We got some industry feedback that why is it that we cannot have more flexibility in terms of the financials that can be onboarded. and whether this is how the interpretation is. So we immediately issued an FAQ in terms of that, yes, this is how it needs to be interpreted. And within a month, we actually came up with the revised guidelines, incorporating those aspects into the framework, because we believe in actually making the industry thrive in the IFSC and become a truly global international financial center. Thank you.
Wonderful. I think that sets the tone for the next few years. Possibly, Shekhar, do you want to delve a little bit more that what are the primary goals for IFCA Gift City and possibly next 2 to 3 years or maybe 5 years to take the ranking up from the global financial centers for the IFCA way up?
So thanks for the question. Obviously, the primary goal for Gift City is to onshore the offshore. As Madam rightly mentioned, all the transactions where an Indian entity feels that I need a support from offshore financial center, please try to look forward to a solution in Gift City. So the primary goal with which the Gift City was set up was to onshore the offshore. The second thing is to generate employment. Even like we have seen a lot of Indian talent being diverted to other offshore jurisdictions just because these opportunities were earlier not available in India to an extent. So making those opportunities available in India is the secondary goal, and the idea is to generate 1 lakh direct employment by the year 2030. Talking from business activity perspective, as I mentioned, that we started with the core financial services. So just to highlight the growth trajectory, the bank names, all the bank names what you see on the board are currently present and operating out of Gift City. So that is the biggest achievement. We have 31 banks right now operating out of Gift City. And from 2020, right from 125 institutions to 800 plus institutions. So you can see how we are witnessing. Just to set the context, what has been done, we have built a strong base in terms of what type of businesses can operate out of these jurisdictions. So we have built a strong regulatory framework for each business vertical. Now further, what we are intending is to build upon the strong base and reach to the beneficiaries of these regulatory framework. So the entities which are benefit out of these regulations, we are trying to create that awareness, reaching out to them, highlighting the benefits that these entities get, and also not only restricting to the entities but to the end user of these products as well. So not only financial institutions but the consumers of the financial institutions are also ultimately benefiting from these regulations. Just to give an example, there is a 10-year tax holiday which is available to all the businesses which are IFSC licensed in Gift City. So from the day you set up in Gift City, you get a window of 15 years. Out of these 15 years, the entity gets to choose a block of 10 consecutive years where the entity will not be paying any tax on their business income. From a banking perspective, the element of withholding tax on the interest repayment which is made to the bank, that is eliminated only in Gift City. So it creates a merit or a direct business advantage even from the banking players to set up their branches in Gift City or their wholly owned subsidiaries in Gift City. And what these banks in turn are doing, they are passing on these benefits to the end consumers or the end users of their products. So an Indian entity booking their offshore loan from Gift City or taking their foreign currency loan from Gift City, they get it at highly competitive rates as compared to other financial centers. And not to forget the cost of operations as compared to other financial centers. It is way, way, way cheaper to operate in Gift City rather than operating in other financial centers.
Thanks, Shekhar, so much. While I would not jump the gun and cut the margins for the bank, but definitely it's a benefit for the customers. We all know that from an onshore, especially in funding in foreign currency, onshore, there is a requirement to fund from the FCNRB deposits, right? So we all know that what NREs get deposit rates and possibly there is a margin and all those things which go into there is definitely going to be an arbitrage as against the Gift City where the market is global market where the banks can source their funding from. Tarandeep, back to you. I think Rohit, back to you from a practitioner point of view. What is the future plans for MUFG's operations? While you gave the insights about what you are currently doing, what are the future plans for MUFG in GIFT, IFSC, what are the advantages which you briefly touched upon, possibly delve a little bit more. And of course, while all is positive, I'm sure there might be some challenges which possibly the regulator needs to, come up with solutions on those aspects also, if you can touch upon briefly.
So, see, I think the focus, as I mentioned earlier, is very clear. Broad-basing products, broad-basing customers, broad-basing systems. So, essentially, all these three put together will be the focus areas for us to grow the business there. Helping or working with the regulator to support the new initiatives like ITFS and other kind of liquidity solutions, or as you mentioned, as in I would just dwell back to what Shekhar just mentioned on onshoring the offshoring business. I would say we should go one step further to offshore the offshore business, which is what a business is not necessarily linked to India. It's a customer outside of India getting booked in GIFT, which technically is essentially additional business that gets booked into. That should be the focus primarily for us to see the next level of growth. I think we have seen significant growth. You mentioned hockey stick. You need to ensure that the hockey stick keeps going on, right? Yeah. So I think just coming back to the challenges per se, as in so. See, for any GFC, which is a global financial center, to grow or be in the league of the top 10 or top 15, 15 names across the globe as such, there are 5 pillars that they need to hinge upon. First pillar is human capital, availability of talent, nurturing talent, attraction of talent. So I think that is something that will need to be focused, as you mentioned, that the focus is for hiring more than 1 lakh people over a period of time. Second part is enablement of business environment. I think more or less that aspect is getting catered to, as in wherein we are seeing that there is a continuous improvement, continuous feedback being taken, continuous employment of that kind of feedback is being done. The third part is where reputation, as in we need to build a reputation, which, or rather we need the world to know that there is something like this available here. How do we ensure that this entity or this aspect of this business is captured correctly as such? Fourth part is financial sector development. By that I mean availability of capital, availability of liquidity, availability of tax reforms and other things there. The last bit is infrastructure, as in how quickly we can build an infrastructure which will enable us to call ourselves a very, very big financial center. People will be willing to come there, will be wanting to come and invest out there and take the business forward from there. So I think these 5 pillars, if we focus upon, I think we can be there in the foreseeable future as such.
Thank you so much. The last question before we summarize and throw it open. Tarandeep, you want to share something about what is your plan for the future, the ladder, how you want to set next 2-3 years for Standard Chartered, possibly more products, more offering, and I know what you're going to touch upon, possibly that is going to excite most of the participants here.
So, as I said, purely from a trade perspective, we are fairly mature. We have done all, in terms of bringing the capability, I think we've done all of that. I think the next phase of growth, the way we are looking at it is, how do you make this entire ecosystem self-sustaining? So most of the banks, in GIFT and, and most especially the foreign banks, most of us are either looking at liquidity today, either from our HOs or, doing intra-borrowing within GIFT, right? So that's not the best way to, to create an ecosystem that is a lot more sustainable. I think the next piece of growth we are seeing is with all these new initiatives, including, the RBI regulation that allows corporates to keep FCY offshore, and with the recent regulation from IFCA in terms of, creating regional treasury centers, global treasury centers. I think there is now a clear direction for us as a bank to see how do we create liquidity to fund the, asset growth and to fund the, future growth for GIFT. So whether it is, coming out with retail solutions, wealth solution, investment solutions, for the ecosystem that is settling here, participating in exchanges, participating in commodity exchanges, stock exchanges, etc. How do you cater to all of that? Also, coming out with liquidity solutions for corporates, pooling solutions that are available in the most advanced financial centers. How do you bring that into GIFT to bring in the liquidity to ensure we are self-sustaining? I think that's one piece of work that we are very keenly working on. I think very few banks have an capability to open accounts today in GIFT, because everyone is borrowing from offshore and just making this as a funding or a financing solution center. We are seeing how do you create a self-sustaining body of ecosystem that self-funds itself. The other big development, I think, as a bank we are working is the entire, again, a very novel thought from IFCA to create a settlement, foreign currency settlement system within GIFT. I think a extremely futuristic thought. So IFCA and CCI have created a JV to do foreign currency settlement within GIFT. And I think we being, again, one of the oldest banks, we've got the mandate to be the payment settlement bank within the ecosystem. So we are gearing up for that entire piece of work. Hopefully we are coming out with that entire infrastructure, market infrastructure. And I think from there the conversations are only going to get incremental in terms of how do you bring more pools of funding into this entity so that you continue to fund the growth that we see in the future.
Thanks, Randeep. I think we all know the settlements, how challenging it is, particularly loss of time, which is the most important, and that's what is getting addressed as a last, or if not many other solutions, of course, but this is one of the key solutions which we are talking about is the settlement. So with that, possibly I'll just summarize the discussions before I throw it open for a few questions which we can take. 4 years in running, and possibly the unified regulator which we are talking about. So you have one-stop solution where you can touch upon all the regulations requirement at one window clearance. You have a unique regulator. As an IFCA, you already have 31 banks already operating from across the continents, right? I think across the continents you have clearing now coming up. 250 plus funds, exchanges, and possibly 800 FIs already being there. The cherry on the cake is visit GIFT City. Possibly everything is within the ecosystem within 30 minutes and clean air, So that's the cherry on the cake. You have a good lifestyle there. Many of you, of course, all of you are offices in BKC. Step out now and you'll know the challenges of possibly reaching home. All those things is going out once people are there in the GIFT City. So important landmark initiative from the Government of India, and hopefully it will ease out and possibly pave the path for India to grow from $800 billion to possibly $2 trillion and even higher. Thanks. I'll open up maybe a few questions if I have time.
So just to add on that piece. So there is a riverfront property that is recently rolled out. Big attraction within GIFT if someone is looking at shifting or looking at GIFT as an opportunity to stay.
I hope Shansi is not promoting that.
Just to highlight, there are 23 operational buildings and there are 37 buildings which are under construction, and this is all happening simultaneously. So within a span of 3 years, we'll find a completely different skyline. And it's an integrated model. You don't only have commercial, but you have social and residential elements as well coming up.
Hi. Thanks a lot for a very informative session. And I'm not asking a question, I'm giving a suggestion. I've been a CFO for the past many years, but very few banks have told us about advantages of the GIFT City, whether it's private sector or the Indian banks. I myself visited GIFT City from the outside as a visitor, never been for work there, but I've seen it's a very beautiful infrastructure. I would suggest that similar kind of conferences like we have in Mumbai, Pune, Bangalore, Delhi, you should host CFO, Treasury, and such similar kind of conferences in Gift City, because the proof of the pudding is seeing is believing. That is my first suggestion to you.
Thanks for
Well,
that.
well noted. So,
I think there was one last December.
so we do host many
No,
events
so last
on
2 years we have been having the annual trade conference.
yes.
I'm sure we need to have a more wider reach now, since you've not been invited for that through your banks or through the IFSC. Yeah. No. Yes. Right. Last year, the Global Treasury Conference, which was held in May 2024, I was a speaker in
Okay.
that, and I had interacted with a lot of CFOs and CTOs, and we interacted on that. It's a continuous journey, feedback well taken.
Thank you.
And yeah, it's a long journey. We are trying to make the best efforts out of that. Thank you.
Am I audible? May I ask a question? Here. Yeah. So this is on the leasing options that we have currently. We have included aircraft leasing and ship leasing. Also, there is a list of lot of equipments that are there. So any plans to broad-based and include the back-end equipments that go in manufacturing of those components which manufacture the aircraft? Is there any plan to include them as well?
Sure. So I'd like to answer the question in the manner that we recently came out with the oil field equipment consultation paper. In the consultation paper, we have listed out the objectives that are required to be met for enabling a particular product or equipment to be leased out of IFSC. So if you have a read, you can have a go through that particular public consultation paper. You'll understand what are the objectives to be met. If you feel that yes, there is a product or an equipment in your mind which meets those objectives, please come back with a proposal to the regulator. We'll be happy to explore that.
Thanks.
Yeah, hi, good evening. Thanks to all the panelists for a very insightful
We'll
discussion.
keep it the last question.
My question is to Riddhi. Firstly, thanks a lot for your wonderful support to all the units at IFSC. Two half questions. So we talked about onshoring what has been offshored, right? And I think Rohit also mentioned about getting in business which is not necessarily India linked. Currently, we are, I think, having India business and India linked business, right? So what is probably your message or vision regarding getting completely offshore business into GIFT? And second part of the question is, what kind of policy or regulatory changes can we expect, or if you could throw some light on what we can see coming in the short term or the medium term, especially in areas outside FEMA, so taxation or duties and items like that, insurance and those kind of things.
Yeah, thanks for the question. As far as tax, I'll answer it reverse order. So tax, I'm not an expert and I will not be the right person to speak on it. But yes, we have consultants which are operating out of GIFT. We have the Big Four and even the down in the hierarchy who are there to consult, corporates and advise them onto their structuring on how they can better utilize GIFT City as far as expansion is concerned. In terms of other initiatives, I would say that it's an ongoing journey. We are trying to look at each and every aspect. Initially when we started in 2020, we had very basic regulations. And we believe in principle-based regulations. What we do not want to actually go on mandating or prescribing each and everything. We are more a principle-based regulator, wherein we give the freedom. So if you look at even the Treasury Center framework, it says that you need to have a broad approved policy in place, which covers your risk management aspects, your investment strategies, your compliance issues, your audit requirements. So it's left to the board. What we expect then is when we come on site to have a look at your operations, we are able to look at the fact that yes, you are in alignment with what your board approved policy is. So that is the approach that the regulator is taking. In terms of flexibility, yes, ease of doing business has been at the forefront of all the discussions that we ever had, and we are ever going to have it. We've seen a lot of changes. We have seen in the past companies which have registered themselves from the point of taking the name concurrence under the MCA to the extent of getting authorized by the regulator or getting a license, if you understand that as the term, then in a span of 15 to 20 days. So there have been, and not only one instance, but a couple of instances where people have a clear strategy in mind, they know what they are here for, and they come, they do, and they start the business within a month max. We've seen transactions executed within a month. In terms of the first question, wherein you wanted to understand about how a person should look at offshore to offshore, maybe yes, we are not just focusing as an international financial center for India, but it is for at least the region we target at. We have entities who have come to discussion who are financing on the ITFS platform. If I give a example, there are transactions which are exporter and importer both outside India, but there are transactions which are getting financed through the ITFS platform. And that is exactly how we look at all the other aspects. If the banks here can vouch for that, that they are themselves are trying to consolidate. We have seen entities winding up their businesses in Singapore, in Dubai, and consolidating it in India and still catering it to their overseas entities. We've seen funds doing the same thing because of the tax advantages or the regulatory comfort. The fact that being in India, you are still a non-resident under FEMA, gives you a lot of flexibility. The currencies that you can deal in have been increasing. We started with 11, now it's 15 specified currencies. At the same point in time, the flexibility of using INR for your operations, for your business transactions, the recent clarification or the circular that RBI issued, which brought in more clarity on how SNRR can be used. So I would say that IFSCA is a unified regulator. We have at our board the RBI, SEBI, IRDA, PFRDA, and the ministry sitting onto the board of IFSCA. And it's a very collaborated and focused approach. Any entity who intends to set up any business, whether it be offshore to offshore, offshore to onshore, we're happy to have a discussion. Thank you.
Thank you, everyone. Possibly Tarandeep and Rohit, you may have many requests for transfers, internal transfers, and possibly for Sanjay maybe and Jack, Ed, next GTR in Gift City. Thank you so much.